In this video, we're going to be talking about the best Forex trading strategy, and my guess is that you're probably looking for a proven, reliable, long-term, consistently profitable Forex trading strategy, and that's why you're watching this video. Now, in this quick video, we're going to show you exactly how the banks think about their Forex trading system, and I promise you this is different than what anybody else is teaching on YouTube. Hi there, my name is Adam Winnig, and we built this entire YouTube channel to help make your trading ELF easy, lucrative, and fun. So if you're new here, congratulations and welcome. Go ahead and click the subscribe and turn on the notification bell so that way you can get notified anytime we release videos to help make your trading easier, more lucrative, and even more fun. Now in this video, we're gonna be talking about a specific trading strategy that the big banks understand, that the institutional money understands, and that the informed understand. And this goes against pretty much anything else that you're going to be taught on retail trading level. And I can guarantee you that if you don't take into consideration the things that are talked about in this video, then you're going to be caught spinning your wheels. You're going to try a trading system that looks promising. You're going to try it for a week and maybe it'll work, maybe it won't work. And when it stops working, you're going to come back and you're going to look for another trading system. And how do I know I fell into this deep trap of doing that over and over again until I understand these key components, okay? Now, this video, we're going to be talking about the ins and outs of how this strategy actually works. But if you want a more in-depth look at this, we actually wrote an entire book. It's actually available for download for free on our website, bluedgefinancial.com/free-book, I believe it is. You can download it for free. There's no catch. This was written by a real professional Forex bank trader, and it's called Edge Trading Secrets, the unspoken laws of a Forex bank trader. So I highly recommend that you get this, and we'll start diving in right now. So with that being said, what are the key components to a holy grail trading system? And this is exactly how the banks trade. The first key component to a holy grail trading system is to not look at technical indicators, okay? And that may seem different when everybody's talking about it. It's not to look at fundamental indicators either, because fundamental indicators, as we know, we're looking at the news, we're trying to grasp an overall picture of the overall economy, and with technical analysis, we're looking at indicators more or less to try to get an idea of what's going to happen with the market. But both of those things are not going to allow you to accurately predict the future, and what is going to allow you to somewhat accurately predict the future is by using sentiment analysis. And this is not talked about, it's not common for a reason, okay? Because this is what the smart money understands. Sentiment analysis is simply the overall sentiment, or what the overall feeling of the market is. For example, in the market, there's two players. There's what's called the herd, and this is all the retail traders, and there's what's called the smart money. This is the banks, this is the institutions, this is the hedge funds. These are the guys that know what they're doing. And there's a reason why 95% of retail traders end up losing money, and the big banks are almost always profitable with their Forex trading strategies because they use this system that we're going to talk about in this video. Now, with that being said, back to sentiment analysis, okay? You can get the overall sentiment of a market by using different tools. For example, you can go onto my FX book, which is widely known throughout the Forex industry, and you can get an idea of what's happening overall in the market. And you can see any currency pair. In this case, we're looking at the Euro US dollar, and we can see that 79% of retail traders on my FX book are thinking that the market is going to go short, as you can see here. Now, the funny thing about this is that the herd is almost always wrong, okay? If you watch it closely for a long enough period of time, you'll see that if the herd is buying, the market's almost always going down. If the market's going down, then the herd is buying. It's almost always wrong, and it's really interesting, and this is something that the smart money and the brokers understand and they take advantage of. Now, if we look at another image right here, I was looking at earlier today, this is just a short snapshot of example of the Euro US dollar on the daily time frame, and you can see this huge spike in red positions, which is short positions, which means retail traders or the herd is selling, and look at what happens in the market. As the retail traders are selling, the market actually moves completely against them, almost exactly opposite. Now, if you take a look at this over time, you'll see that this happens all the time. So if you were to just simply trade against what the herd's doing, you'd have a much higher chance of becoming a successful Forex trader. So you want to build this into your trading strategy for sure. Now, I want to show you guys another image right here where you can see a blue histogram. And in this blue histogram, we see the overall net position of retail traders, okay? In this instance, you can see that that this first spike you see where this purple line is, retail traders are beginning to buy. They're beginning to go long, and if you look what happens, the market actually goes downwards, exactly opposite of them. And then when the retail traders start getting beat up enough, then they start selling, and then what happens? The market reverses and it goes almost exactly against them. As they're selling off, the market goes up. And then you can see it as price is going down in this third purple line. You can see that as price is going down, the retail traders are going net long, meaning they're buying. So they're almost always wrong. So simply using the simple tool before getting into a trade, just looking at my FX book and the overall sentiment analysis and doing whatever the opposite of the herd is going to be a major breakthrough for you. The second key component is to understand levy flight distribution and understand how to get fat tail reward, meaning get unlimited reward trades, but also get limited risk trades. So you don't want to have unlimited risk and limited reward, which is what most traders do. So I'll break this down and show you what this actually means here in just a second. Now I'm going to pull up this graph here that shows what I'm talking about. Now most traders think that their trading falls in a normal bell-shaped curve like the image shown in blue. However, that's not the way that the financial markets actually work. The way that they actually work is they have these red fat end tails, and this is where huge gains or huge losses happen, and this is when the market goes on a major trend. Now most retail traders are unable to understand that, and what they do is they try to get high win rate systems, but the problem with that is that a lot of the times they have unlimited risk and they have only a limited amount of reward. So let's take a look at these two ends of the spectrum, the fat tail risk and the fat tail reward end of the spectrum. The fat tail risk end of the spectrum is the probability of an extreme move that will result in a huge loss for your positions. The fat tail reward spectrum is the probability of an extreme move that will result in a huge profit for your position. Okay, so the smart money understands how do we take advantage of this fat tail reward, but how do we also limit our fat tail risk? So the exact opposite of what I'm talking about would to be do things like that are detrimental to your trading account. Things like a martingale type of strategy where you're doubling down your position as the market goes against you. The problem with that is it's unlimited risk and it's only limited reward. Also things like cost averaging. As the market goes against you, continue stacking in more positions. This is detrimental, again, because you have unlimited risk and you only have a limited small amount of reward. So these sort of bad money management strategies are stacking the odds against your favor. Number 3 thing that you should look out for in a holy grail trading system is to not try to catch the tops or try to catch the bottoms of the market, because this is where the smart money is preying on retail traders. Now, what are indicators that try to predict the top or the bottom? Almost all indicators. I mean, let's be honest, support and resistance, most people think about this is one of the most fundamental things that you should be doing in your trading, but it's just trying to predict where the top is or where a ceiling is and where the floor is, or where the bottom is. And the problem with this is that everybody's looking at that. The smart money knows that you're looking at that, and they're going to take advantage of it. I mean, how many times does it break through support and resistance? You probably see a lot of times. Or think of any sort of indicator like an RSI or a stochastic trying to tell you when the market's overbought or when the market's oversold. All of these indicators they're disastrous. They're not really going to give you a long-term trading edge at all. So don't try to catch the tops or the bottoms of the market, because if you do this, then a lot of the times you're just going to be swimming against the trend like we see happen so many times in the sentiment analysis. Number 4, what you want to do is you want to cut your losses short, but you want to let your wins run long. Just like we talked about embracing this fat tail reward, but limiting the fat tail risk end of your spectrum. And this is the interesting thing. The statistics show that retail traders can actually overall win a majority of their trades. In this depiction here, you can see that 61% of people that traded Euro US dollar were actually able to predict it winning, meaning they had a 61% win ratio. But why does 95% of retail traders end up losing money? Because they have horrible risk to reward ratios. Their losses are bigger than their wins. Just by simply having a 1-to-1 risk to reward ratio, at least, you're going to dramatically increase your chances of becoming a successful trader long term. Number 5 is to simply follow the trend. The trend is your friend, okay? And what I learned from a professional bank trader was the fact that, as a matter of fact, if you simply just looked at the overall sentiment and did the opposite, and you simply just used moving moving averages. He said that one of the only indicators that you should maybe ever look at is moving averages, so that way you understand which direction the trend is actually following, so that way you can begin to trade with the trend, okay? Trading against the trend, which a lot of retail traders do, is a complete disaster. So make sure that you're always 100% trading with the trend, and ideally trading contra-crowd, trading against what the retail herd traders are actually doing. And the last thing is to actually scale into your positions into the trend. So most people, what they'll do is if they're in a losing position, they'll begin to scale in more and more positions into a losing trade versus doing it the opposite, versus adding positions to a winning trade. And what the smart money does is they stack on positions into the trend as they're winning, which is maybe psychologically difficult for most people that are traders, because we want to just get our wins, we got the wins, and we want to cut them off. But what the smart money does is they actually stack and add into the trend, which is really, really interesting. Now, hopefully you found this interesting, and we got a couple things that can help you implement everything that you heard about in this video. Number one is we have the book. It's called Edge Trading Secrets, The Unspoken Laws of a Forex Bank Trader. It goes into more about this stuff that we talked about in this video, but more in depth. Secondly, if you're like, well, how do I actually implement this? Well, we actually partnered with the guy who wrote that book, who's the ex-Forex bank trader that created an automated trading strategy. So if you're interested in using all of these components into an automated strategy, then we have that also available for you to try out at blueedgefinancial.com. You can try it out for 30 days. If you don't like it for whatever reason, you can get your money back. So hopefully you found this video helpful. There's a ton of other videos that'll pop up here on this page. Consider liking right now and subscribing if this was different, if this was unique, if this gave you some aha moments. And there's also a bunch of other videos on our channel that can help you become successful. So with that being said, again, our whole purpose is to help make your trading easy, lucrative, and fun. Hopefully we did that, and give us a subscribe and like now.